Saying, well,
So I hit record, and then you hit the music.
yes.
All right.
That's nice. Beautiful.
Welcome, everybody, to the We Love Money podcast. My name is Alex, and I am joined here by John. Welcome, John.
Thank you for having me back.
Dude, fancy seeing you here. I can't believe it.
Actually, you're here. Fancy seeing you here. You came to see me today.
It's true. Location change. We have made a pivot. We are in nice, comfy new couches, sipping coffee, spilling it all over your new couch.
Oh, please don't do that.
So we are back with the We Love Money podcast, where we talk about money, and apparently John is hijacking the meeting today and disrupting everything. He's got something he wants to talk about. Oh, God, here we go.
It's not as much as he wants to talk about, but I'd like to say this, and I think, I like to just ask you this question. So it's 10:30 in the morning, 10:40 in the morning Eastern time. The market's been open for an hour, right? So my question to you is, when you're starting the day and you see the market open, what's the first thing you're looking for? Right at that 9:30 mark, what's your thought process? You're looking at the NASDAQ, you're looking at the S&P 500, you may want to be making some trades, you may not to, but what is your first...
Like when I wake up in the morning, what do I do?
So what do you do in the morning as you prepare for the market to open?
Wow.
And maybe in the first hour? What's your thought process as you're looking at things? And that could be now, or even think back in the past when you first started.
I got your question. So basically, I'll tell you that every morning, I basically open my phone and I immediately look at the futures for sure. I just want to see where the market's generally at. I scroll over my Yahoo Finance app and I look at the 10-year yields. I'm always looking at the 10-year Treasury yield to see what's going on with interest rates. These days, I'm definitely looking at gold. I'm looking at crypto because crypto tells me what all the crazy people are.
Everyone talks about crypto.
Crypto tells me what all the crazy people are doing, so I definitely check on crypto. And yeah, ultimately I kind of just scroll through the general markets, and then if I see something crazy in any one of those, I'm clicking on to read an article probably just to check and see what's going on. And then in terms of the open, yeah, I generally try to, these days we got Jamie taking the kids to school, so I am fortunate enough to be able to be sitting outside on my lanai, sipping my coffee, and watching the market open on CNBC. So usually at 9 o'clock, I'm sitting outside and I watch the news leading up to the segment they have leading up to the open. And I just kind of that way, if anything crazy has happened overnight or over the weekend or while the market was closed, I am at least up to speed with what's going to be going on that day and ready for it.
So let's talk specifically and I love that, but let's talk into even more as a trader or somebody who likes to purchase things. So we've kind of talked about this before. I want to see if you remember. What's your rule that you always advise in that first hour of the market being open?
So
I think you know what I'm talking about. Yeah.
So what you're talking about, I think,
because you'll see a lot of activity. I mean, usually in the market, it's just you'll see things rocket in the first hour, whether on a positive up or down, and it is just.
I think I know what you're wanting me to say, and what you're wanting me to say is don't make any trades in the first hour of the day. Because that's something that I was taught when I was really heavy in the options trading. So when we talked about it last week, when I first got into this, I was doing options pretty heavily. When I was doing options, I would go to a meeting every single month where we would kind of talk about it. And the guy there who was very successful at options trading, he was the one who used to say that. He used to say, no trades in the first 30 minutes of the day for sure. And he would say, really, if you can make it the first hour, that's even better because, for lack of a better term, all the noobs trade in the beginning of the day. Basically, he was saying that ultimately that when you see that knee-jerk reaction in the morning, that a lot of times you make a trade and you're in that initial inexperienced wave of people, and really what's going to happen and develop that day, all the experienced people are waiting for stuff to develop. So in general, what I would say is experienced traders generally tend to trade at the end of the day, toward the end of the week, generally. Obviously, in today's day with all the news, that might change a little bit based off what's going on. But they generally try to chew on the news, wait to the last second, kind of digest it, let it develop, rather than trading really heavily in the morning. So early in the day is usually not the time you want to be making decisions and trading out. If you're leaving a position and you have a huge spike, I could see that. You know what I mean? I'm happy with it here. I'm not going to get greedy. I'm just going to take it out. But having said that, usually, especially if you're buying something, if you see something jump up and start running really crazy in the morning, I would absolutely be waiting until the first hour because a lot of times
cool off a little bit.
A lot of times you'll see that really quick run and then you'll see some sort of cool off. So even if you're wanting to jump in that day for sure, waiting until 10:30, 11 o'clock, a little bit later in the day can definitely help you hopefully not FOMO into it and get some better pricing.
And do you feel that that's kind of the same in the last hour of the day as well?
Like you saying like don't trade closing into it?
Yeah.
No, I would not say that.
Okay.
I would say that, yeah, I generally, I try not to wait till the very, very end of the day because, again, there tends to be really heavy volume into the end of the day.
Well, that's kind of what I was asking.
But with that, I'm saying 15 minutes. I would say the last 15 minutes of the day is what I'm talking about because
that's your window of close.
Because that is where all of the institutional trades start to come in. That's basically what I said before, where all the big money trades at the end of the day. That's what you'll see. Is you'll see literally the volume bar and that last literally. I say 15 minutes, but really a lot of times it can be the last 60 seconds of trading. You'll just watch all this volume pour into the market, because that's when a lot of those institutional trades start taking place. So I would, if you're making a decision, I would probably try to make your decision before that and not get caught up in the emotion of like that end of the day. Maybe not wait the last 15 minutes, but yeah, other than that, I mean, you can place a trade at the end of the day if you're looking to get out of something, especially, or get into something. But
no, that's really good advice. Because I think that is. When we first talked about it years ago, I was definitely a learning curve, like for me, because I would just see it. I'm like, oh my God, like this first hour, like there's just so much going on. Mm-hmm. And again, that is what you said, that leads into people kind of just trying to ride the same wave as everybody else. Yes, could it work out in your favor? Sure, but
let's look at this week. Let's look at earlier this week, right? So at the end of the day, earlier this week we had over the weekend, Trump went to China, or not Trump, but Bessent went to China. There were some China negotiations, and they came out with a de-escalated tariff situation with China that happened over the weekend. So when that news came out, naturally, you as one probably would guess on Monday, the market's already, when I did my morning check on Monday, the futures were up almost over 2%. Everything was super jacked up. And at that point, so going into like what you're asking me, that morning, I had people reaching out to me wanting to, of course, jump in because they see the news. And that's why we're saying avoid it, right? Because literally everyone's seeing this news. Everyone's like, oh my gosh, FOMO. And realistically, if you tried to buy in Monday morning, the market opened up 2.5%, 3%. It maybe ended the day up 3%. You know what I mean? So at the end of the day, you really didn't make any money buying in early in the morning. The move had already been made overnight while the market was closed. It opened up already. You weren't able to capture that huge portion of the jump. You just jumped in after the fact, and while the market hasn't really corrected or anything after that, so like you haven't been punished for that, so that's good. But the risk is exceedingly higher, right? Because what if that was like a jump up and then people sell off and take profits, right? Plummet, yeah. And you just bought into that and you're giving them the out, right? Again, so that's kind of the reason for it, right? Is because a lot of that smart money is going to wait till the end of the day. A lot of the move when you're talking about like a news scenario, especially, or like an earnings scenario, the move's already been made in the morning. Now, a lot of times you watch a stock, and especially like on earnings, yeah, it'll pop up 5% and it ends the day up 10% or 12%. But usually, again, a lot of times you'll see at least a quick opportunity in the morning if you're a patient where there's like some sort of like, okay, let's cool down for a second before it really resumes running. So regardless, like, and depending on your time horizon, patience is always going to be a virtue. If you're really trying to time something specifically, your window will be shorter because it's a very specific timing situation. But even then, if you can be a little patient, it'll pay off.
I think that's very good advice, especially for those out there who are like, again, just listening to us and getting started. I think taking it slow and, doing the right thing, being patient is always the right move. So going in with that, it leads me to my next segue, earnings. A lot of times you see huge volume opportunity, both good and bad again, during an earnings report. And so I think there's a lot of excitement that gets drawn into an earnings report, especially if you've been doing the research on the company, research the market cap, see how the spending's going, have they hit the numbers. and the trends of previous quarterly earnings, because it's a quarterly earnings basis for most companies. Some, I think, do half.
No, everyone's quarter.
Everyone's quarter.
Everyone's
okay.
every quarter.
So my question to you is, and I imagine it's probably the similar response, but what are your feelings on when an earnings is expected in a day, 2 days, 5 days, and you see those types of volumes? What's been your experience with that, and what would you like to share?
Yep. So, I mean, same thing applies. Again, I think that earnings, if you are really trying to play earnings, you can play it before the report comes out, but you are definitely gambling at that point because earnings reports are super complex and there's a lot of things that go into them. So even if you get some of the numbers right, you can miss on one metric you didn't even think about, and the analysts that matter will decide the stock goes down, and you are not. So again, if you're going to try to play it beforehand, you are gambling. You can do it that way, but if you're going to try to wait until after earnings and kind of see what happens, same exact thing applies, because there's going to be some element of FOMO, especially if the stock goes up and you're kicking yourself for not buying in ahead of time.
Especially when it goes up and again, from experience, 15, 20%, you're looking
depending
at
on the stock, I mean, that
massive that
jumps.
Can
definitely happen. But what I would say to you is there was the risk it would go the other way.
Correct,
right? So if you would have bought in beforehand, you easily could have lost 15%. So that kind of takes me to my greater point of we're in this for the long haul. Even missing out on 15%, which is an extreme example of an earnings situation, even missing out on 15%, we're in this for the long haul. 15% over our lifetimes is a small percentage in the scheme of things. Mm-hmm. And what I would say to you, which is something I kind of was planning on saying today with my topics I brought, John kind of hijacked the meeting, which is fine. Fine. But one of the points I kind of had in mind, which is perfect to make right here, is what I would say to you is this. Which one will hurt you more? Missing out on something you never had, or losing something you've worked your whole life to gain?
Wow.
Right?
I just got chills.
I mean, but it's the truth, right? So
no, it was well said.
Because if I don't buy, if I wait and I'm patient and I resist the FOMO to buy into the open, whether it's news driven, whether it's earnings, whatever, and I resist, the only risk I face is not earning money, right? Is missing out on money that I could have made. That risk, while that sucks, and that there's a lot of emotion that goes into that type of feeling, it's not nearly as damaging and painful as losing something that I worked my butt off to have, that could have paid for toys for my kids, could have paid for me and my wife to go out to dinner, could have paid for so many different things, and instead I just lost it. You know what I mean? And it was based on this, the emotions that go into making that decision and having that happen. That to me personally hurts a lot more and is going to keep me up at night a lot more than missing out on some gains that I never had in the first place. So at the end of the day, I'm in this for the long haul. If I miss out on a 15% jump, that just confirms to me with solid evidence that the company I was looking at is a winner. I'll be patient and I'll try to hopefully wait for an opportunity, even if it takes a little while to jump into that stock. And I would rather do that and, again, face the risk of it keeps going up and I miss out on gains. There's plenty of efficiency and plenty of opportunity over the long haul. I'm not going to lose sleep over that.
Yep. This earnings topic is very similar style to day trading. And again, I think both of us agree the best advice through both of these discussions is don't try to time the market.
Yeah, I mean,
timing the market is extremely stressful. It's possible, but it's also kind of impossible.
Yeah, I mean, I just know the game you're playing. I mean, I think that everyone says they know it's gambling, but it's easy to say that when you're winning, when all you're doing is winning. And when the market's going up and everyone's bulls, everyone's going to be winning. So it's easy to sit there and say, I understand the risks when you're winning. When you start losing, and that kind of takes me to a greater point here, that I was listening to CNBC the other day, and actually Jamie was listening to it. She's the one who kind of made, right? Dude, she kind of made a comment about this. She was like, I was listening to them. That was really interesting what they said. They basically said that this is a new market, a new world, basically, that we live in. And when you look for the way the market used to be, the market's always been cyclical. There's patterns. When this happens, you see this happen. There's like rhyme, there's reason, things happen like in an order, so you can kind of like interpret and see and predict which way this is going to go, at least generally. Whereas like right now, that may permanently be out the window, right? I mean, I feel like we've kind of entered this stage where it's like, there's an old saying in the stock market, you probably heard me say it before, that the stock market takes the stairs up and the elevator down. And I feel like that has always been true, but I feel like today it's like more true than ever before. Now it's like we run up the stairs and we jump off a cliff. Like there's no elevator like that goes down slowly.
Or a plummeting elevator.
There's no elevator in a slow controlled manner. It's like everybody is just like fully on, and then my fear is, and that's what makes me so pessimistic and so bearish these days, is that I know that when the downsides come, they're going to be sharp, they're going to be fast, you're not going to have time to think about it, and that kind of goes to the point of what the guy was basically saying, and I agree with him 100%. There's not time to think about things anymore in this market. If you think, you missed it. Either the downside or the upside, doesn't really even matter. Like that never used to be the case.
You always had a little bit of
to
time.
interpret and to understand and like make a decision. Like now, like you don't. And I feel like that's a product of more people being involved, more retail traders, the birth of Robinhood and things like that. There's more people playing in this pool than ever before, and there are more people actively playing than ever before. Mm-hmm. The world's crazy, dude.
Mm-hmm. You always said it too, dude. The further it gets from zero, the harder it falls.
Yep. I mean, it's crazy because right now, which kind of this we can kind of talk about what I want to talk about today, John.
Sorry again for hijacking, but also not sorry.
But yeah, literally, so that kind of goes into today, like where the market's at. What do you do? Right? What do you do in this market right this very second? Because there's a ton of uncertainty. You listen to whoever you listen to, they're going to probably have very polarizing opinions. People think we are either adamantly going up, we are adamantly going down, one way or the other. And there's a lot of people who are actively trading. Like I said, they're watching this every day. They're more involved than they've ever been in their finances because it's more accessible to them than ever. So what should they be doing in this environment? Should they be buying? Should they be being patient? Because we don't know which way this is going to go. And I think that the market absolutely could continues to go the way that it has been, or it could, see a steep correction. And I've said for a while that when you look at technically the charts of the stock market, it looks like we're due for a clobbering. But if things are if market sentiment's going to continue to be positive and we're going to continue to push forward, the market absolutely can continue to go up. So if that is the case, and we're in this world where that could happen, but also you listen to other camps and they're like, we are not in good shape, this is going to be bad, and that could happen, what do people do? What's the right move?
Again, and I don't think there's a right answer for that.
There is not a right answer. That's true.
Really just about everyone assessing their own risk levels.
Well, let's talk about that. You what's the first thing that comes to your mind in terms of like?
In times of uncertainty, I go very conservative, very blue chip, very smart. I try to sell out of a lot of things that are risky.
Sell out of a lot of things that are risky.
Let me rephrase. Stop investing in risky. I don't tend to sell unless I absolutely want to take losses or.
But you're not changing any position. So are you? Let's start with the positions you have, because I know that we've talked about this before. People know, we already know that, like, we know that there's like an active adding thing going on. But let's talk about, so for people who don't have the active adding thing and they're looking at their portfolios, what are you doing anything with your active, with your active portfolio, with the portfolio that you have right now, already stocks in? Not what you're adding, the stuff you already have. Are you changing anything?
Yes. So if I want to pick something that's done okay, that might have been on the riskier side, and I want to put it into something conservative, I will sell it.
So you'll sell like risky, but that would be the stuff you would target.
Correct.
Like riskier stuff.
I still think if you're in conservative stuff, I don't think it's necessarily a bad thing to just hold it and leave it as is, because time and time again, that stuff, regardless if it goes up and down, we're planning for it to go down. It does have that correction at some point. And I believe that. That's my personal belief. So I tend to maintain those conservative options if I can get a squeeze on the riskier stuff on a positive note, on a positive end, I'll try to sell out of that and maybe reinvest it into more, re-add into those positions or pick up something new that's in that conservative level. I like the safety net of, okay, times of uncertainty. I'm not smart. I don't know what the market's going to do. I'm not going to sit here and try to time it. But what I do want to do is continue the best way that I know for my money to continue working for me in those times of uncertainty. And so that's kind of my direction. I might take some and put it in just a high yield savings account. Absolutely. Is that not the best way to make your money work for you at 3.6%? What's the average nowadays?
Probably over 4 at this point.
I think it's gone down though. I think it's gone down from 4. Some of them maybe, but I mean I can say at least for mine it's gone down now to 3.6, and some are in the 3.2s.
I think my money market's still over 4.
Oh well, then I need to get your information after this. But even doing that, I'd rather earn a consistent 3.6%, knowing that okay. That's there. It doesn't have to be there forever. It's a placeholder.
No doubt.
Until I've decided, okay, this is a good time to transfer it back in and re-engage once we see a little bit more of that.
And for context, I want to give people like a real life example of what you're talking about right now, because for a lot of people, I don't want to presume that everyone has the ability to like have enough cash flow to be just like throwing it at the market every month. I want to definitely like consider the people who all my money goes to my expenses. What I got is what I got. I want to do something. I don't want to just sit here because I think that sitting there and doing nothing, as boring as it is and like cliche as it is a tried and true strategy, right? Again, if you have a strategy and a long-term plan, as long as you're not like in a time horizon where you're about to start like needing to make changes to everything, you can totally just sit there and do nothing if you want to. I think that will work. But let's say you want to do something. Here's like kind of like to what you were just talking about. Here's what Jamie did. So we looked at her portfolio. It's crazy where we're at. Like a month ago, we were looking at it and we were having the conversation, should we be selling this and that and this and that? And Jamie was wanting to sell it because the market was crashing. Everything was going down. We didn't do that. We stayed tried and true. But today, looking at her portfolio, it looks a lot different than it did back a month ago. Literally everything has gone up, and particularly we looked at Uber, right? So we looked at Uber, and Uber was one a month ago that we had talked about selling because she had made a bunch of money in it, and it was going down, and it was like one of the higher risk assets in her portfolio, kind of like what we're talking about. And we didn't do it, but now Uber is at all-time highs and looking super spicy, and I was like, came up to her yesterday, and I was like, see, now would be a good time to consider selling Uber. So I actually
some shares of it.
Exactly. I talked her out of it before because I was like, again, never make these emotional decisions. It's going down. Let's just hang tight. But now that we're here, I'm like, now is the time where I would be like looking to reduce that risk. You've bounced us back, honestly, pretty unbelievably. And let's go ahead and trim some of that. So that would be an example of where that had gotten a pretty overweight in her portfolio, meaning it had gotten pretty big in terms of the overall size. So we trimmed about half of that position, and I'm going to use that money. Right now it's just sitting in a money market, but again, continuing to trim things like that, maybe some winners. If you're in the market right now, you probably have some winners places, and even just like trimming some of those, maybe 25, 30% of the position, half the position, whatever you feel comfortable doing, depending on how big it is, and putting some money on the sidelines in like a money market, earning that interest so that you can be defensive and kind of have some dry powder to do some stuff with.
Right. And again, I think that's amazing advice. But I think also kind of just to even trim it back more, you were saying an individual who basically is paycheck to paycheck for the most part, doesn't have much, what to do in times of uncertainty if they want to invest. And I would suggest even just starting small, a money market account or a high yield savings account, just earning something where I think the biggest piece of advice, anything in a checking account, get rid of it. Keep your checking account low. You earn, I would say on an average.
Not have any more than you need in a checking account.
Keep what you need in a checking account. Make sure you have access to cash if you need it. I say a good rule is...
This is where knowing your budget comes in.
Again, knowing all your expenses, knowing your budget. I think whatever the number is, could be 200, 500, whatever it is, to comfortably keep in there for emergencies if you need to withdraw cash.
200, everything 500 else in a checking? Operational. You operate out of not a checking account?
I operate everything nothing comes out of my checking account. The only thing that comes out of my checking account is to pay my credit card bills.
Wow.
I keep
okay. Well, for the normal people out there,
I know, but what I'm saying,
for the normal people out there,
right? See, that's the difference. I'm telling them $200 to $500, whatever it is, keep something in. I keep $20 to $30 in there.
No, but what I'm saying is, that if your budget, like if you have like $8,000 in monthly expenses,
and your
paycheck comes into your checking account, I'm saying leaving $8,000 in there because it's going to go in and out, in and out, in and out.
You need to keep
it's not going to, again, well, yes, I get that it could be in there earning interest for the 12 days that it is. Again, at the end of the day, like,
let me rephrase.
It's the not amount of money, abnormal to keep an operational budget in the
money
checking account.
that I was specifying is money outside of your expenses. So
like
that is your leftover money after expenses.
Got it.
Because I'm not accounting for that money because that money's already going to get pulled out for whatever bills you're paying.
So what you're saying is if like their expenses are $8,000, they keep like $8,500, $9,000 in there at a time. A little bit of cushion just in case there's like extra stuff.
Well, let's make it specific. $8,000. Let's say $8,000 your monthly expenses for everything that you own, everything you have to pay. Your check comes in $9,000 a month. So once a month, you pay $8,000.
$9,000.
You have a $9,000. I know that would be incredible paycheck.
Wow.
We like strong numbers here. No way is anyone making that kind of money unless you're doing big plans. But so $8,000 is your expenses, everything. You have $9,000 in the paycheck, so $9,000 is in your account. I would say once you get through all that, leave yourself a cushion of $200 to $500, and that other $500. Take it out of the checking because the checking is not going to earn you anything. It's like 0.08 on the dollar.
Let's even make it simpler because you are very on top of your money. You are very on top of like moving things around and all that jazz. For the people that are not as like, on top of that, what I would say is, how does this sound? If we come to agreement on this? If you have a monthly budget of $8,000, I would say anytime your checking account gets over $10,000, you should sweep the excess into at least a high yield savings or something else.
That's fair.
Fair?
That's fair.
Again, $2,000 cushion. If it ever gets over 10, you sweep the rest over there. If your budget's 8, you keep a little excess. You sweep all the rest into at least a high yield savings, something like that.
Correct.
Right? And then so whether you do that and you're able to accumulate some stuff in a high yield savings, or whether you do something like what we were just talking about earlier, where my wife did that, where she sold a couple of winners that were a little higher risk things out of the portfolio to make some cash. I think that having cash is something you want to be doing right now.
Cash is king.
I think that right now, regardless, kind of going back to what we said before, if the biggest risk you're going to face is not gaining with that money, that's worth it to have some dry powder that if the market does go down, you can be on the offensive instead of freaking out and just riding this roller coaster down on the defensive. If you are able to, instead of freaking out, again, you're able to actually have some powder to do something with, to buy some stuff, to average your cost down, to take advantage of it. And even just having that hopefully will make you not only like at ease a little bit, but much more confident should we see a downturn, right? Because I think that what that does is it allows you to manage your risk, and you don't need, any kind of help if the market's going to go up. What you need help with is if the market's going to go down. And whether you think that's going to happen or not, it's super uncertain right now. And having a little bit of a cushion and, again, conversely, some stuff to play offense with, that I think that will make things a lot easier to navigate as you go forward.
I agree, 100%.
And if you have already done that, right? Let's say you've already done that and you're kind of in that position where you're sitting there, maybe you're buying a couple things here and there as the market's moving around, maybe you're being patient. I want to make sure I'm super clear that, in my opinion, 65-year-old and a 34-year-old body, Alex, I think doing nothing right now is also fine, right? Just waiting.
Doing nothing is something.
Being patient, letting it see when it plays out, because let me put it to you this way. What do you think Warren Buffett is doing right at this moment?
Knowing him, he's definitely buying more.
You think?
Mm-hmm.
I don't think that.
I definitely think he's buying more. I don't think he's selling.
I don't think he's buying anything.
You think he's being completely calm right now?
I think he's doing nothing. Warren Buffett, his investing philosophy is I buy things that are on sale. That's his investing philosophy. the market going up is not a reason to buy. Because if you tell me the stock market's going to go up, for Warren Buffett, that's not a good enough reason to buy. If it's not on sale, it doesn't matter if the market's going to go up. He's not interested. And honestly, that's kind of the way that I have become with my mentality is in a time like this, even though it stands to reason that the stock market absolutely can continue to pump out new highs as we continue on to the end of the year, I think that it doesn't change the fact that there's a lot of uncertainty and things are overvalued.
Things are definitely overvalued.
Things are inflated. We don't even remember what things cost pre-COVID. We don't even remember. And I think if we went back and looked at it, we would be like, our minds would be blown when you look at stock prices, when you look at the cost of goods out there. And the reality is that we're still in this really weird place. So while it doesn't mean the market's going to crash, it means that the risk of it is there. And it definitely at least means that nothing's on sale right now. There's nothing really out there that's just like, that is such a good deal, I got to buy it. So I can tell you pretty confidently that Warren Buffett might be deploying little bits of his cash here and there. He might be doing that.
Small things.
But he is not buying like a crazy person. And I see a lot of that out there right now. I see a lot of people glued to the markets. They see it tick up. They see NVIDIA in the news because Donald Trump is overseas with all the tech people. They see this, they see that, and they're like, I want to get in on that. What I would say, I don't think Warren Buffett's doing that. And I think that you would all agree with me that Warren Buffett is like the man and knows what he's doing. And if he's not buying, why would we be buying? You know what I mean? Why would I be recommending to you to buy? Now, if you tell me you want to buy, I'm going to have to be humble enough to not tell you no, because I don't know if it's going to go down. It absolutely could go up. Absolutely it could. But I will tell you that Warren Buffett, who I try to model myself after, I have a hard time believing that he's out there just slinging cash out there, buying stuff left and right. So
you make a very compelling case, Alex.
Thank you. Thank you very much. Do my best there, John.
Austin, 220 pounds.
What the heck was that?
Ghost.
But that's my greater point, dude. That's my greater point, dude, is that I think that being patient right now, the world is crazy. It's really difficult to do that because things are flying around. Emotions are seesawing back and forth. But patience is a great plan, in my opinion. If you want to be active, think, use your brain, have a plan. Don't just follow everybody in because have a plan.
I think that's very, very good advice.
All right, well, you kind of already asked me a question at the beginning. I know we're kind of getting towards the end of our time period here. Do you have anything else that you want to ask me, John, since you know?
No, I think you let me kind of run this interview, and I appreciate it. And I think we got some great questions. I'm trying to think if I had another question for you. Well, no, we'll talk about that another time.
Talk about that another time?
Yeah.
What else did I write down here? Okay, cool. Before we wrap up, then I'll get one more thing real quick. Real quick, fire off some quick resources you think are good for beginners. So if people are beginners, we've talked about lots of resources being available. What are some things you use to just keep up with markets? Maybe some apps, maybe some news stations.
I love Yahoo Finance. I think Yahoo Finance
is awesome. It's a staple.
I think CNBC News is great for,
I live on CNBC these days.
Yeah, I think that's awesome. I think there's a lot of great... you have to pay for those subscriptions.
There are some you can pay for.
Business Daily, yeah. I think, is great.
I think that one's great, too. That one is you will pay for to get the most out of that one.
Yeah, again. But I think even if you try it for a month, I know they do a lot of trial periods, so I definitely recommend people try those 7 to 14-day trial periods.
Definitely.
And see what you think, because... you could probably you definitely will pull some great resources if you know where to look.
Yep.
And know what you're looking for. But also, I think even just going to Google and typing in the company and maybe just learning about the company that you might be interested in. I think, we've talked about it before, about investing in what you like. And I think that will just give you a basis, a starting point of just realizing what this company is, what they're about. Yes, you can. It's not going to give you the minute details of everything, but it gives you a good overview. And I think a good overview is important before you make any, before you start diving in. Like, I'm hopeful that just doing that will help you home in on what you want to look for.
No doubt.
And once you've done that, then I think you can utilize those resources.
Yep, and I think that going back to like a couple pods ago when we were talking about immersing yourself, that is exactly what I think those apps are great for, right? It's great for news. They're great for overviews. They're great for data. They're great for immersing yourself. Now, so I think they're all fantastic. And I think that's exactly what you should do to kind of get started, right? Because I think rather than like trying to really like get super analytical, just getting your feet in there
dip your toes in the water
is the way,
yeah.
Right? Stay general. And then when you find what you want, get more specific if you want to get more into it as you go, right?
See, this is why we need Alex, because he can take everything that I said and really, because I talk like a 5-year-old.
But this is why I need you, because I would be sitting here suggesting like trading platforms and like stock charting things they can use, when the reality is that nobody here is probably ready for stock charting unless you've already been into this for a while and all that type of stuff. So I do agree that for beginners, the ones you named, I would stick it right there. I would say CNBC, Yahoo Finance are both free. Utilize those. There's lots of resources. They both do a fantastic job of getting it to the everyday person. If you're looking for more than that, Investors Business Daily, I think, is a great periodical. So that's like a news company, and they have a bunch of different like resources they offer. So that one you can pay for and get more out of it. It's awesome if you do. They have, when I mentioned earlier in the pod that I was like doing that monthly meetup, that was actually through Investors Business Daily. They have like a local meetup where you can go meet up with other subscribers to that periodical. So again, those are great resources.
I'd also like to do a nice shout out to a podcast that we kind of listened to for a while. Years and years ago. We've been kind of off of it, but they're great because they give, kind of 3...
The best one yet?
The best one yet.
They still even do... I'm
pretty sure they're still going. But they're a great company because, again, people, if you don't have time and you drive a lot, like I think podcasts, if you can find one that you like, but the best one yet I thought was great. I think it really helps solidify our foundation.
I think that is great for immersing yourself, continuing to immerse yourself, and then also to get some exposure to some opinions that are going to be talking to you in simple terms, right? Because I think there's not enough of that out there.
Yeah. And they make it fun.
Exactly.
Keep it fun.
Exactly. It's a little more lighthearted versus like the other things we're talking about: Investors Business Daily, CNBC. Yahoo, they're fantastic, but they are going to talk finance speak. They're going to literally talk to you like the professionals they are, and if you don't get what they're talking about, it's not going to do you a whole lot of good. Whereas something like The Best One Yet, or hopefully our content here that you're listening to, is a little bit more lower to the ground and easier to like, we're talking to you like we would talk to our family members and not like I'm on TV trying to prove I have some sort of reputation here to uphold. So we don't want to confuse you. No. We want you to understand this. And I think that, TBOI, The Best One Yet, is a good resource for that.
Definitely.
All right, dude.
Well, listen, guys, we are going to close up shop here. Alex, I want to thank you for coming on.
Wow.
I am John, non-CFP, and I'm here with Alex, CFP. And it's been a privilege to have you here in my home.
Podcast is gone. It lasted 3 episodes, and now John has taken over. I respect it, though. It had to be done.
You knew what this was.
I did. It's true. It's true.
All right, go ahead, Alex. Close us out.
No, hopefully everybody got something out of this. And honestly, John, it's your podcast now. That's it. It's over. It's over for me.
Until next time?
I'm just a guest here. And until next time, that's Finance AF. Have a good one, everybody.
I wanted to do the close.
Do the close.
How dare you steal my thunder?